Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys here, the one, the only, the Bert, the Hurt, and Lanny, guys. And today we're about three undervalued dividend stocks to buy in this high-flying, evergreen stock market, guys. It's all about adding passive income. So today we're going to show three options that are high on my stock watch list.
Smash that subscribe button. Give this video a thumbs up. Help the boys reach 20,000 subscribers. Let's freaking go. Lanny, it's Sunday. If we get this video to 300 likes, you know what that means. Swag giveaway for one lucky subscriber that leaves a comment down there below and also tells us what stocks are you watching right now.
Yep. So like, subscribe, and comment the stock that you're watching and liking right now, guys. That's how to get into the swag buck giveaway. We want to give out sweatshirts, t-shirts, hoodies, coffee mugs, you name it. We can't wait to reach out to hopefully a winner here. 300 likes is the goal, guys. But Bert, the S&P 500, again, we're filming this on the night of July 18th. We are filming this actually at 10:47 p.m. Eastern time. The money engine doesn't sleep. Guys, we're all about building passive income, guys. Dividend investing is what we've been doing. Gosh, I've been at it for 15 years. Bert's been at it for, gosh, almost that long too, 12, 13 years. Nonstop trying to get to financial freedom, guys. Harder to find undervalued dividend stocks. If you caught our last video on Saturday, yesterday, definitely check it out because Bert's considering doubling down on his you know, favorite ETF that he's been buying every single week because how hard it has been to find undervalued stocks. As we continue to talk about almost the same stocks over the last few weeks, we sprinkle in a few other stocks that really nobody's heard of sometimes. But today we're going to bring in three stocks. One has been featured on our, watch list and stocks to buy recently, but we have two others that maybe haven't been talked about as much. So I'm pretty excited to dig in, Bert.
Yeah, I am too. We've talked about them before, but it's been a hot minute. They popped up and they're coming back down and showing some pretty decent metrics as we run through our screener. So that's what we're going to do because that's what the two of us here do on this channel. We run these companies through our famous trademark pending. No, not really, but trademarked in our minds, in our hearts, dividend Diplomats dividend stock screener. First metric, price earnings ratio less than the S&P 500. Second metric, payout ratio less than 60%. You got to know that dividend is safe. No more dividend cuts for us here. Three, history of increasing that dividend where we focused on that 5-year average dividend growth rate and how many years in a row that company has increased its dividend. And that bonus metric, the dividend yield. Lanny, how are we going to do this today? Are we going to go stock by stock or metric by metric? What do you want to do?
Yeah, I'm giving it back to the people. We're going to do it the way that you guys have traditionally now like to see it. You like to see one metric, all the stocks. So that's how we're going to roll with it. So then you'll know all three stocks that we're looking at, and we'll see how they all stack up, pretty much against each other, guys. And we're in the heart of earnings season, so we'll have to see kind of what shakes and bakes this watch list here, guys. But to start things out here with the first dividend stock that's on my watch list because they're down almost $50 from that 52-week high earlier this year, about 2 months ago. Elevance Health is back
Ooh.
on my radar. Ticker symbol is ELV. They are formerly Anthem. If you guys know the big health insurance carrier, a lot of noise going on because of United Health's big cyber attack. So, ELV, I don't know if they've also been dragged down from it, but I would think they would benefit from it from potential consumers leaving. But Elevance, $504.72. Their analysts are expecting $37.28 in projected EPS there. So the PE ratio for Elevance Health, again ELV, is at less than 14 times earnings.
Wow. Hmm. That's not bad, actually. I mean, the S&P 500 is what, 24, 25, Lanny? It's, yeah, it's a discount. That's definitely a discount there.
Discount
So
double check.
give them the Aaron Rodgers discount. Oh my gosh, I was going to say the discount diplomat dividend check, but Might be getting a little late here for this. Lanny, let's take it to the next one here. Why don't you take it while I gather myself?
All right, let's dive into stock number two, guys. CVS Health. Ticker symbol is CVS.
Love it.
Again, they've been tattooed quite a bit. Obviously, we all know the dumpster fire that Walgreens Boots Alliance is going on right now. This stock's down 26% this year with CVS trading at $59.91. Analysts are still expecting almost $7 per share in earnings. They are ran much differently than Walgreens. They
Yeah.
have got so many different, I call them tentacles in the healthcare space because of the Aetna acquisition in the health insurance space. But then they have many other different things going on from a merger and acquisition standpoint that they're continuing to, I guess, try to be a part of everybody's health,
Yes.
their life. So,
Yes, and I was just telling Lanny the anecdote for my employer there. It was just announced the plan's moving from United Health to Aetna. So if you want to shop it, you should go ahead and shop it. And then as it turns out, a bunch of the other places that the brokers that were going through all suggest Aetna anyway. So I thought that was a fun little anecdote for Aetna to show that, yes, they have something that Walgreens doesn't there in CVS. They have a massive health plan that people are continuously actively looking to go to.
exactly.
Yeah.
But you guys are here for the dividend metrics, guys. CVS again, 6.99 expectation on the earnings there. So you do the math, less than 9 times forward earnings for CVS.
Okay, so it's even more of a discount than Elevance Health. Let's see what dividend stock number three is. Leaving that sector, leaving healthcare behind, moving to coffee. Starbucks, ticker symbol SBUX. I don't know. If I don't know if you've been watching our channel, but I don't think we've ever talked about Starbucks on our channel, especially not over the last month or so. Kidding. It's one of the only undervalued stocks that we're finding and buying of late. Starbucks price is 74.19. It continues to hang in the mid 70s. Earnings per share is $3.58. The forward estimates that gives you a PE ratio of 20.72.
Exactly. So this is the first one over 20 times earnings on this channel. Again, discounted comparative to themselves and the S&P 500 though. So again, Starbucks beaten down over 20% this year. Let's get into the dividend payout ratio, the safety of the dividend. Elevance Health pays, quarterly dividends on an annual basis. It adds up to $6.52. That's a 20 or 17.5% payout ratio. So low, so safe. Let's go.
CVS's annual dividend is $2.66. That gives you a payout ratio of 38%. Also very safe. What has Starbucks looking like, Lanny?
Starbucks, 57 cents a quarter, 228 per year in dividends, taking that over to 358. We're at 64% dividend payout ratio. So just over that 60% threshold. And they've ratcheted up as we've gone down the line here. But all of them say Starbucks, the future growth on the dividend might be smaller coming up.
That's right. So now let's focus on that third metric, the dividend growth here. Elevance 5-year dividend growth rate is freaking impressive. It's over 20% at 20.75%. They're halfway to becoming a dividend aristocrat with 12 plus years of consecutive dividend increases.
Wow, impressive.
Yeah. Yeah.
uh, CVS is now on their third year in a row of dividend increases because after the Aetna acquisition, they paused for quite a few years, but then they just really resumed them in 2021, 22, and 23. So you have a couple goose eggs on the dividend growth streak. The first couple of years. In the last three, they've been like just 10% hammers on dividend growth, but technically on average, only 5% if you average it out of the last 5 years.
Starbucks, 9% 5-year dividend growth rate. They've increased it for 13 consecutive years. Not bad history streak, but again, we keep being cautious and being honest and saying we don't think it's going to be 9% until they work through some of these operational issues and start growing earnings again.
100% agree. Let's get in now to the dividend yield, guys, which is how much this company is going to pay you, how much passive income you think you're about to get on a percent basis. We all know your high yield savings and money markets are between 4 and 5% right now. Well, Elevance Health is at a whopping 1.29%,
Ooh.
1.29%.
CVS, it's a little higher than that. Their yield's 4.44%.
Then you slide right into the third base here with Starbucks at 3.07%. So just over 3% for Starbucks.
All right, so CVS is the clear winner from their Starbucks over three. Elevance the lowest, but again, they have that massive dividend growth rate to complement that low dividend yield. It's perfect.
Yeah. And, keep in mind, guys, Elevance Health, their 5 year historical yield is 1.08. So you're getting about 21 basis points in addition to that. How about CVS?
Their 5-year dividend yield is 3.02%, so they are crushing. They're absolutely crushing at 1.42% over that 5-year average.
And Starbucks 5 year dividend yield average is 2.22%. So they're also doing they're the value is giving you more yield right now for the potential risk with Starbucks, but at 85 basis points over that 2.22%.
Beautiful. So we've gone through the metrics here. Let's talk performance for them. Elevance, up year to date, they're up 5.41% over the last 52 weeks, up 13.76% over the last 5 years. They've crushed it. They're up 67% overall.
Oof. Yeah, I mean, then you got CVS obviously getting crushed down 26% this year, down 17% since last year. Still have a 5 year, growth of 7% over the last 5 years, despite what's happened.
Not bad. And Starbucks, well, we know it's been a bad year so far, down 21% this year. 52 weeks down 26%, down 17% over the last 5 years.
Not
So,
too bad. So, when I look at this list, guys, you know, getting real, I mean, I'm still probably 20, 25 shares away on 100 shares of Starbucks. Um, they're just kind of like oh yeah, keep adding to them if I really want to. I do like Elevance Health. I like them more in that 475, 480. So, give me like a 4 to 5% pullback, and I'll probably start buying some, no, not some shares, but maybe some part of a share or a share here and there. Bert and I were joking about that. CVS, again, they reward you, for the potential risk of the industry, for the space that they have. Obviously, healthcare, retail, but again, they have some other, reach in the healthcare space with the insurance and other providers that they have under their belt. Um, I mean, if CVS drop, I mean, if they're in the 55 range, I might grab it, a couple
yeah,
shares possibly.
why not? It can't hurt. I've been sniveling on Starbucks, like you said, it's the one that when I'm just pissed off and I want to buy a stock, I'll just grab one in the low 70s. CVS is interesting, especially now they've had the pullback. They are different than Walgreens, so it leaves me with the question, and maybe this one I'll have to consider. We can talk about it in a future video. Is Walgreens is a loser. Walgreens is always going to be a loser. I'm still holding on because it's such a big loss, but maybe just cut one, slide it into my CVS position and grow that. But
What do you guys think? Do you guys think CVS is some stock to stay away from? Are you staying away from Starbucks? Is Elevance Health? Do you think there's more of a pullback, or do you think they're undervalued for what they bring to the table? Let us know in those comments, guys.
if you haven't already, subscribe to the channel. Give this video a thumbs up. Lanny, what do we need to tell all those diplomaniacs out there?
We need to remind you guys to like the
Ooh.
video, subscribe, and comment on what stocks you like or buying or what's on your watch list right now. Let's get to 300 so we can get some swag giveaway. But let me tell you something, brother. There's one more thing. You're either with us or you're against us, Jack. That was Bert and Lanny from the Dividend Diplomats. Over and out.